The US economy grew 5.7% in 2021 after contracting by 3.4% in 2020 when pandemic lockdowns in March led to a brief recession. Since then, Bitcoin and stocks have had one of their worst starts to a year on record. Rising interest rates, surging inflation, and the Russia-Ukraine conflict roiled markets and killed investor confidence. Bitcoin has broken a critical support level of $20,000, while other cryptocurrencies plummeted as well, and it is suffering as on-chain statistics show more supply and decreasing demand. On the other hand, Kevin O'Leary, better known as Mr. Wonderful on the ABC show Shark Tank, is doubling down on his crypto investments. O'Leary has said that he is purchasing crypto at price drops and is also increasing his Bitcoin and Ethereum positions. Today I will be talking about why Kevin O'Leary is buying the dip while others are selling off everything. Stick till the end of the video to know when the crypto market will rise again. Bear markets have grown almost routine for Bitcoin and other cryptocurrency prices. Since its 2009 launch, Bitcoin's price has tumbled more than 50% 6 times, and Kevin O'Leary has certainly kept that in mind. He thinks the crypto market dip is a positive outlook and will double down on BTC, ETH, and other cryptocurrencies tied to Web3 projects. However, he also acknowledged that not all of his assets would be profitable. The entrepreneur's portfolio includes 32 cryptocurrency stakes, including Sol and Polygon's Matic. He also holds the token of his own cryptocurrency trading startup, WonderFi, which recently became the first to be listed on the Toronto Stock Exchange. By the way, are you enjoying this video? Please give it a like and hit the subscribe button if you like content about the business, economy, and crypto. It really helps me grow the channel. The Bitcoin bear market has reduced his overall portfolio's cryptocurrency exposure to 16%, dropping from 20% 6 months ago. O'Leary announced in April that he's already purchased Avalanche, and his other investments included shares and FTX itself. Kevin O'Leary has predicted that Bitcoin's usage in the United States will take off if there is an increase in regulatory stability. He believes that once that occurs, investments in the crypto market will rise. O'Leary feels that corporations will first invest in BTC before moving on to other cryptocurrencies, and he expects Bitcoin's price would skyrocket to $300,000 after those allocations. And as long as Terra's recent failure is concerned, O'Leary thinks it is the kind of incident that educates traders to be careful and can assist digital assets to go further, since nobody is going to utilize their concept anymore. According to him, the crash taught everyone this wasn't the method of establishing a stablecoin. He believes fewer ventures fail to assist in reinforcing the market, and breakdowns can help predict market bottoms because a dramatic surrender will mark the beginning of a comeback. O'Leary has previously stated that, contrary to popular opinion, most corporations do not own a piece of cryptocurrency such as Bitcoin and will not do so until their compliance divisions enable for the ESG demands. Check a box on these and be able to comply on the asset class on its own. MicroStrategy, Tesla, Block, Marathon Digital Holdings, and KPMG Canada are among the companies that have added the King currency to their balance sheets, and some institutional investors have acquired BTC risk through Grayscale's Bitcoin Trust, also known as GBTC. However, let's talk about the R word. How will the recession affect the crypto world, and what does Kevin think about it? The recession has scared everyone. 81% of US adults now believe there will be a recession as inflation remains near a 4-decade high. And a growing list of top economists and Wall Street investors agree. But Kevin O'Leary has a different view about the recession. He says, "I don't believe we're into a wicked recession yet. Not yet." He said consumption is still doing well at the moment. The US economy is much stronger than people think, and there's no evidence of an impending slowdown or recession yet. He told CNBC's Squawk Box Asia, "I'm not saying we won't get one, but everybody that says it's coming around the corner next week is just wrong. There's no data, there's no evidence, there's no numbers, there's no inclination on the consumer to slow down yet." US GDP declined 1.5% in the first quarter of the year despite strong consumer spending because of the weakness in business and private investment. According to O'Leary, there are 2 reasons why it's difficult to predict a recession. The first is that $4.5 trillion were added to the US economy in the past few years from a helicopter into the hands of consumers and businesses all over the land. He thinks that's an unprecedented amount of money pumped into the system. He also said, "I deal with numbers each week of what the consumer's buying with the money they have. They've been given so much of it in the last 3 years, and I'm not in the camp that says a dramatic recession." And the second reason is that technology has boosted productivity. The direct-to-consumer strategy is increasingly adopted in all sectors of the economy, which means higher gross margins and more consumer data for companies. It is significantly more productive and efficient. The Shark Tank investor said, "Those that are really saying we're going to get a massive recession could be wrong and be missing returns as this market slowly claws its way back. I'm erring on the side of a soft landing in terms of my investment strategy." He said everyone thinks the central bank is out of control, but he's of the view that Fed Chair Jerome Powell is in a pretty good shape trying to balance inflation and employment. O'Leary also pointed out that even if there are indicators of a slowdown or a recession, that risk appears to be baked into share values, as shown by big corrections in several indexes. Everybody who thinks that it's the end of the free world as we know it is not looking at the data. I trust numbers, not talking heads. I get talking heads all day long telling me why they think this is going to happen. I look at the numbers. Numbers don't lie. Cash flow doesn't lie. That's what I care about. Talking heads make noise. Cash is cash, O'Leary said. The economy will slow down at some point, but he said he hasn't seen it yet. But there are people who disagree. Carly Can, a Wall Street powerhouse with a net worth of nearly $16 billion, was among the first to warn of the increased risk of a recession. In March, Akan did an interview with CNBC where he said that a recession or even worse could be in the cards for the US economy as inflation eats away at consumers' wallets. Former Fed Governor Robert Heller is also on the page. He said the US is very close to a recession, pointing to the contraction in the first quarter and signs that there will be no growth in the second quarter. A recession is defined as 2 consecutive quarters of decline. Heller also said we're perilously close to that because we are looking at 0 growth for the second quarter. The smallest negative influence will tip us into a technical recession. As far as crypto is concerned, a macro-led bear market will most likely hurt all digital assets across the board in the coming months. Analysts at Deutsche Bank have revealed they expect the price of Bitcoin to be around $28,000 by the end of the year. For now, we are in a bear market, and it is a bear that will probably keep growling. While it may be too early to prepare for a recession, we could take steps now to better their financial situation regardless. That includes boosting emergency and retirement savings, as well as trimming budgets to keep spending down amid inflation that's likely to continue. Do you agree with Kevin O'Leary? Write "buy the dip" in the comments if you do. If you learned something new from today's video, click the subscribe button and hit the bell icon to be the first to see my next video. I make deep dives like this every week where I uncover the secrets of money and business.